Good evening, ladies and gentlemen. Welcome to Straight Shooting. How's everybody doing this evening? Sorry it took me just a minute here. I have they've redone this again, and I'm looking for the boxes. When I say they've redone it, they've changed everything on me again on controls and stuff. So if somebody would just shoot me a message and let me know you can see the screen and hear me, I would be really, really appreciative. I'm going to get these in line and we'll pull this down and away we'll go. Yeah, they changed the controls again and I'm like, oh, please, why are you doing this to me? I think I saw it this time that they were going to change it, but I haven't had a chance to read it. So I think they actually let people know this time. Anyway, if somebody, like I said, if somebody could just shoot in a message and let me know you can see the screen and hear me, that would be awesome. And with that said, then we can rock and roll and get going. Hope you guys are well, and hope you're having a good week. It's been interesting on this end. It's been a little bit rough, but hey, it's okay. We're here and we're rocking and rolling, and hopefully you guys are trading some. Let's see. Hello, sir. You can see here. Wants to company. Oh, hey, Mike. Coach Mike's here. Oh, yeah. Always good to have you. Sounds good, but no screen. Trust all is well with you and yours and all straight shooters. Let's see. All right. Hopefully that fixed that, Mick. And Mary, thank you. All right, let me see if I can get Coach Mike up here. Hold on. Hey, brother, is that you?
Yes, that's me. Hi, Darryl. Hi, everybody.
Right. How you doing, brother? Sorry, I couldn't find it. They changed the controls again. Every time I turn around, they change the controls. But anyway, this time, though, I think I saw oh, cool, Mick. Thank you. I think they sent an email out, but I think I saw it from webinar, and I didn't get to read it. So anyway, I was busy. So anyway, from earlier, did you get my message, Mike?
Yes, I did. Yes, I did.
Okay, cool. All right, cool. Mike was not kind enough to call me earlier today. We chatted for a few minutes, and I had to blow out of there. I had 2 other calls come in. I had to take them, and took a while to get back to him, and I felt bad, so I left him a message. That's what I was referring to. Anyway, how you doing, Mike? You doing okay?
Yeah, pretty good. First night of target shooting tonight. They started early this year, and it seems so early to be doing this.
Oh yeah? How'd you do?
Yeah. I did pretty sucky.
Did, huh?
I mean, yeah, I hit them all. I hit too many 8s. I shot like a 268, which is like, you got to be kidding me. Not even all 9s. It's terrible.
Oh, well. You get back in it. Before you know, you'll be shooting like Annie Oakley again.
That's right.
Yeah. We haven't been on the call in a little while, and I don't know whether you were on when I started doing Gartman's Simple Rules of Trading again. I don't know if you've been on when we started. And so last week we did markets can remain illogical. Did I do it? Yes, we did. Markets can remain illogical far longer than you and I can remain solvent. Of course, said by J.M. Keynes, right? Which I thought that's one of my favorite sayings. I love that saying. You and I have spoken about that many, many times. This week is his number 7, and it says, buy markets that show the greatest strength, sell markets that show the greatest weakness. Metaphorically, when bearish, we need to throw rocks into the wettest paper sacks where they break most easily. When bullish, we need to sail the strongest winds where they carry us the farthest. It's pretty much self-explanatory, but it's a great saying. Buy markets that show the greatest strength and sell the markets that show the greatest weakness. it's definitely a true story. I mean, there's definitely much truth to that. It really it plays out, and the proof's in the pudding. You know, when markets are going up and things are looking strong, I mean, it'd be kind of dumb to go the opposite way unless you find something that is actually weak in a strong market. Then, of course, you trade it the way the chart tells you. But overall, definitely the markets are strong, you play long overall. And when markets are weak, then we short, right? It's very, very simple. You have anything you want to say about that, Mike? I know you've experienced that many, many times like I have.
Oh yeah, it seems so obvious that you're always tempted to go and do something stupid, and the best advice is always don't do stupid things. Yep. You know, you hear these things and you think about what you've done, and it's like, what the hell's the matter with me? But anyways, moving on.
Oh yeah, yeah, absolutely. Oh, yeah. We've all been there. And that's one of the things I love about the calls, you know, like we get to discuss these things and we get to reinforce, you know, good behavior. And it's very important, you know, that reinforcement. I think we all need it because no man's an island, right? Some of the funnest trades I've ever had has been with you trading. It's always been fun trading with you, you know. And, you know, the other stuff I was looking at my stuff today, and I forgot, this is how busy I've been. And of course I didn't do it without a stop loss, but I shorted MS. So I'll just show you this real quick. But I mean, I completely forgot that I shorted it right below 50, and now it's at 47.70. And I looked at my account and I was like, okay, I forgot that I even did that. That was a couple days ago, right? But of course, I just didn't. Excuse me. Of course, I didn't. I didn't forget. Well, yeah, I did not move my buy to cover down. So I would have broken even. No, I think I already covered about a point. That's what it was. I covered about a point, and I moved it down once. And I just got so busy the last couple of days that I didn't think about it. And sure enough, they just kept dropping. So I'm up on the trade a little bit. It's making okay money. I mean, you know, I'm not getting rich off of this, but hey, it always feels good to make a good decision. And as you can clearly see, and you know, you guys and ladies, what you can see, I got to get used to this. By the way, this is my new computer, which I'm kind of excited about. With a big up day, and then a shooting star, and then you have dark cloud cover, or engulfing, not dark cloud cover, an engulfing pattern, a bearish engulfing pattern. So now you know it's going down, you know. So when I saw that it dropped below the 50 level, I was waiting for an entry point, and boom, away we go. So anyway, that may be pretty limiting here. RE Mike's comment. I don't know which. That's by Mick. I don't know what he's referring to. Do you know what he's referring to, Mike?
I suspect I do, but we'll wait for an explanation.
Okay. All right. So anyway, when you see this pattern, I mean, it's a really nice setup. And, you know, just because you see this, as you guys all know, this is a strong reversal signal. A shooting star is very strong. But, you know, it doesn't need confirmation the next day. But I have, in the past, many years ago, just went ahead and shorted the heck out of it, you know, right away, because that's such a strong signal. It's still not smart because it's still, as you can see, the upside of this was the high was 50.37. So what if I had shorted at 49.92 and I put a stop loss, buy the cover stop loss at say 50, I don't know, say I put it at 50.30, I would have been stopped out, you know, on this. Now, if it's on this day, you know, that's resistance, but it still could have got up there and then reversed and come down, which would have given us a tweezer's top. You know what I'm saying? So you don't want to just blindly short something just because it is a very strong signal. Every once in a great while, you will. Hey, Mick, by the way, if you'll just kind of explain, because I'm not sure I'm following you, and I think Mike said he understood, but if you don't mind to explain, that would be helpful, sir. You know, when I got in here, it showed weakness. And so when it showed weakness, then that's when I shorted it. I'd very tempted to have shorted, right there at 49.99, but I didn't. I forget where I entered, but it's still, I'm up on the trade. So that makes me feel good. And of course, look what's happening here. I mean, we have a support level here of 47.40 or so. So, as it comes down and it tests it, and I may move my body cover down real tight and get it down there real fast, but to cover. We'll see how it does. But it got weak near the end of the day. It actually started getting weak, just like all the financials did after the Fed announcement, which we'll talk about. But it did get weaker and weaker. As a matter of fact, I can show you real quick how weak it got. I'm going between back and forth. You have to bear with me for a minute. I'm going back and forth here. Like right now, I'm using a mouse, and I'm not used to using the mouse. So because it's a laptop and it's got the little pad, so I always use the pad. But I'm trying to get better here with the mouse because it's a little bit more exact. Anyway, where's 2 o'clock? Think somewhere in here, right? Yeah, there it is. So it started to get weak. It looked like it was going to rebound, but look what it did. It came right up to that level, hit its head, and then started to sell off, went sideways, sold off, tried to gain, and then started really getting weak at the end of the day. So I'm really, really happy where I am. It's nice to have made a good decision. It's nice to have a trade go your way, and so on and so forth. So, like I said, I'm not getting rich, but that's okay. I mean, I'm after the decision, and the money will follow. So, Mike advised not to do anything stupid. LOL. Oh, okay. That's what you're at. That's
what Mick meant, if I understood him correctly, was I said, we shouldn't do stupid things, but half of everything we do is stupid. So if we can't do stupid things, then it becomes a self-limiting kind of thing. Becomes a self-limiting situation. Yeah, it's Monty Python humor. Sorry, folks. It's how we are.
That's right.
Sorry. Mick understands me. He knows what I'm saying.
Yes, absolutely. So when I saw the market, when it goes to play, here I am using my friggin' finger again. It just goes to play when it, sell the markets. It doesn't have to be the overall market. The overall market's going up and things look like they're at levels and you want to trade long, then that's what you should trade. But this one was a stock that had a reversal pattern. And I'm not looking for 20 or 30 or 40 points. Would I be happy with that? Oh, you bet. But the fact is, I saw this and I went, okay, right at the level, so on and so forth. Let me see if it's going to get weak. And I just forgot about it. I really did. I moved my stop loss down, my body cover. So I'm protecting, a couple bucks there. So I'm happy. It's just very simplistic, very easy trade. And it plays into what Gartman says. Buy markets that show the greatest strength, sell markets that show the greatest weakness. I sold this because it was showing me weakness and it showed a reversal. You can be talking about a stock or an industry or a sector or the whole, an index or whatever. So, all right. So I'll repeat just one more time. Metaphorically, when bearish, we'll need to throw rocks into the wettest paper sacks where they break the most easily. When bullish, we need to sail the strongest winds for they carry us the farthest. So that's our simple rule for tonight. That's rule number 7. All right, let's rock and roll. Let's move on to the Dow and so on and so forth, and we will go forward here. The Dow is really looking pretty, wasn't it? I mean, it started to come up. We talked about last week, which was the 19th, which was right here. We talked about it hitting a resistance level here, right? And we're looking at it and we're saying, okay, well, it closed at 26,405. Let's see how it goes. It went up the next day. We have a spinning top, and then it got real weak. And there's the confirmation, ladies and gentlemen, right there that we have an evening star, which is a strong reversal. And it does go down, and it does go down. But look where we are today. We're at 26,385. You might as well call it 26,400, right? So it's now, this has turned into a blue or purple or whatever, I don't care what it is, but it's support. Okay, right now 26. We'll call it 26.4. We're at a support line, or we're at a level. Let's correct myself. It's a level. Let's see if it's what's going to happen. I don't know. I mean, it bled off a fair amount of RSI, a lot of buying. So now we're down here at 60, where we were up here at 76, 63. So let's see where we go from here. It's very interesting. I didn't know it was going to break out here, and it sure did jump up, and then it stalled. Now, look at this. Remember, I always point this out. I don't know why I always point this out, but I have to. I guess it's just in my blood. Look at the amount of volume. How many people have you heard say that volume equates to conviction? Well, yes, it just shows there's a lot of people or a lot of trading going on, but it doesn't always drive a stock up or down. You could have a spinning top like this, and look at all that volume. The volume is huge, but it didn't move. It didn't move this very far, right? So I'm going to move this back up, and we're going to bring this up here, and we're close. If we go to a year, we're close to where it was. The high was right here. The previous high, well, it was right that day, and now it's made a new all-time high, and now it's gotten a little bit of a sell-off. So it did break that all-time high right there. That's where it was before, and now we went up as high as 26,769. So it's pretty exciting to see this happening. I mean, it really is. I'm really, I'm glad I get to see this. I really am, because it's history. And, it's not just the same old mundane stuff. It's history being made. And it's kind of fascinating to me. So it did bleed off a lot of buying pressure. So let's see where we go from here. You got anything you want to comment on the Dow here, brother?
No, you actually said more than I was thinking. So I'm sitting here learning.
Learning. All right. So here's the S&P. Funny guy. Here's the S&P. We're going to move this up, and this also, if I'm not mistaken, also was an all-time high right there. Yep, there it was. But you see, ladies and gentlemen, we talked about this last week. Here was the all-time high at that point. Then we have consolidation, starts working its way up, and it broke through right there. What is that, 827, somewhere around there? And it broke through and made another all-time high, but it made an all-time high earlier and faster than the Dow did. So it was leading us out of the forest, right? So it made another all-time high, and it's pretty damn amazing. It really is amazing to me that we're still rocking and rolling like this. It's pretty cool. We have previous support right down here, right? And we were looking at it, we were looking at it last week, because right here, let's see, 19th. And then we didn't, we're still in consolidation. We had resistance right here, and then it breaks through and goes up, and then here we are here at 29, high of 29.40. And that's the all-time high, isn't it? Yeah, 29.40.91. So, and then it goes, it stalls, and it comes down, and then today's kind of a weird pattern for the candles. It also bled off a fair amount of buying pressure. It's down to 56.31, so it's just a hair over. If it were to come down and test down here, that's great, not a problem. I don't think it will fall below that unless we have some major event. So we're looking at support here, and we're making sure that we're not going to drop below 2,900 and close below 2,900. I just don't think it will, by the way it's acting so far. I'm not predicting. I'm just saying that's what it looks like on the chart. I'd be surprised if it closed below 2,900. The S&P has been pretty damn good leading us out of the weeds. It really has. So we'll see where we go from here. But watch your levels, 2,900, and we're looking for support. Shouldn't go below that, I wouldn't think. And then we have a new high set right there at 29.40. So let's see. We also have resistance right here. Excuse me. I'm still kind of clogged up at 29.15, 29.16. And so we'll see if we'll break through that and see if we can bang our head against the all-time high again. Anything you want to say about the S&P, brother?
Yeah, just a little bit. So today was Fed interest rate day, and remember that usually what we see on on big event, news and event-driven days like today, is we'll see a move in one direction, then a pause, then a move in the other direction, then a pause, and then it will pick which direction it's going to go. It doesn't always go one way, the other way, and back the first way. But usually there's a little bit of a head fake in there to start off these things. So, like as Darryl was saying, I don't expect the S&P to go below 2,900, and right now we're only 5 points or 6 points away. We really need to keep an eye on these levels, because with it sitting at a level, and tomorrow and the next day it's going to finally pick its direction, which way it wants to go. We need to keep an eye on this thing. I'd feel a whole lot better about it in terms of just being lackadaisical with my trading if after today the thing had landed kind of in the middle of a range. But right now it's really close to support, so we need to keep an eye out on this. If it heads down, it could head down a lot. And I'm actually a little bit hoping that it will, because I love shorting. but if the market goes up, we'll trade it on the upside. But I was not unhappy to see it head down towards support this afternoon. Let me just put it that way.
There you go. Absolutely. Very good. Thank you, sir. NASDAQ. How are we doing? Let's see. So the NASDAQ made another all-time high right there, right? If I'm not mistaken. That's 8,000. And it is 81.33. And now it has sold off, and now it's consolidating. All right. So this is not the three indexes, the three main indexes that most people watch. They're all different, and that's kind of unusual. Most of the time, the Dow and the S&P go roughly in the same direction. One will go up a little bit, or one will go down a little bit. The other one will follow it, and so on and so forth. They track each other fairly close. NASDAQ, not so much, but the NASDAQ is doing its own deal here. Okay, they have their own problems and what they're doing and all the tech stuff and yada, yada, yada. So there's been a lot of M&A lately too. So there's, some companies are getting gobbled up and being bought out and so on and so forth. Hey, did you hear, Mike, that Sonic got bought?
Yeah,
Sonic.
Yeah, the burger
place,
wild. Right? Yeah.
Yes, the drive-in. Yeah, they got bought out for $3.2 billion, and I forget how many locations they have, but yeah, they bought them. It's just the company that not owns Hardee's. What the hell is the name? Arby's. The mother company that owns Arby's.
Oh, yeah.
I can't remember the name of the company. That it's Arby's. Arby's and whoever the mother company is that owns Arby's also now owns Sonic. Kind of strange. A lot of M&A going on behind the scenes. So, and it's not just in tech, and it's just I don't know why, but they're buying stuff. So whatever. I guess they got to spend cash somehow, right? If they're cash positive and they want to spend, and now's the time to be buying. So, before the end of the year, they get hit with humongous taxes. They could be buying companies, which obviously they're doing. So anyway, just an interesting side note. The NASDAQ, like I said, it's going sideways, and it has been going sideways for a while. It's just kind of in a tight range. It's not hugely tight, but it's 7,900. It's like 2,900 on the S&P. This is 7,900, and this is a major level. See it? Our level up is 80.50. And then, of course, up here, we're 81 or whatever, about 8,100. And then if it goes up to the very top, it would go to the very, I'll do it right there. There it is. There's the all-time high right there, 81.33. I didn't quite make it. It won't go any higher. Oh, by the way, when Dave K, where you been? He says, hey, Darryl, sorry I'm late, but I'm here. Oh, glad you're here. You'll never guess who's on here with us. He's going to really disappoint you when you hear his voice, but I know you're going to start crying, so go ahead and get the tissues now because your favorite gold enthusiast mastermind is here with us tonight. So you don't have to put up with my nonsense with gold. Anyway, Dave K is on. Dave K's in the house. I didn't see you last week. Were you on last week? Yay! Dave K says yay. That's for you, Mike. Not for me.
Yep.
So anyway, now I forgot what the hell I was saying. What the hell was I saying? I don't know what the hell I was saying. Anyway, let's get back here to NASDAQ. Let's just watch it at 81.33. We closed here today quite below the 8,000. It's 8 points, 8 plus points. Below the 8,000 level, but it's not below 7,900. So we're kind of stuck between, as you can see, the 7,900 and let's just call it 80.50. So we're right here. It's basically been consolidating for quite some time. The RSI is just about halfway. It's just a hair above halfway. Let's see where we go. Okay. I know, Mike, you got to say something about the NASDAQ. I know I can feel it.
Just a little bit.
I knew it. See?
Yeah. Well, you remember if we go back to springtime, the NASDAQ was leading the market. And then over the summertime, the NASDAQ kind of fell behind a little bit. And out of nowhere, the Russell and the smaller stocks kind of came to the fore. And the NASDAQ sort of went to sleep. And it started to come back. And quite honestly, I'm very surprised that technology stocks and all that haven't kind of come back to a leadership role. We're still seeing a lot of market rotation happening, or sector rotation happening very quickly, like within a week. I've seen things where, like, for 4 days the pot stocks are really good to trade, and then they're not really good to trade, and then all of a sudden energy wakes up, and then energy goes back to sleep, and then the banks will wake up for 4 or 5 days, and then they go to sleep. It's not unusual for summer to be choppy, but it's really been kind of almost, I hate to say organized choppy, but it's been organized choppy. Well, now the rest of the market has gone up, made new highs. The NASDAQ has not. The NASDAQ's lagging on the making new highs thing again, and, stuck in this sideways channel. So I really think that if we're going to see the market continue to go higher much longer, we're going to have to see the NASDAQ break out of its current range. It's the NASDAQ. Yeah, all the tech stocks are too big to let the market keep running too long without them finally breaking out. So I've actually had the NASDAQ in the corner of my trading screen for about a week now to watch to see if it ever does finally break out of this little range. But we'll see.
Cool. Well, thank you, sir.
Yeah.
Oh, I know what I was also going to say. When I logged on tonight, it automatically put me through to the speaker on my computer instead of calling in.
Oh, interesting.
Yeah, it's just really weird. That's what I was going to say before.
Yeah.
Yeah. Well, they finagled all kinds of stuff, but that was one of the new things that they did, and it automatically defaulted to that, which I was going to do, but since it's a new computer, I assume the mic is on, but I don't want to assume that until I test it. I'm sure it is. I'm sure that it defaults to being on, and then also the other thing is, a while back, now I didn't change my carrier, but I changed my plan since years ago. I was doing it on my IP phone, but that runs through, of course, my internet. Well, it was breaking up, and so years ago I went on my cell phone, and that's why I do it on my cell phone, so I don't have to worry about the bandwidth being wide enough, right? So I don't know. We'll check it. Maybe I'll check it next week. It'd be nice just to be able to talk right to the computer instead of having it, But isn't that funny? When I first started this, I had to have the receiver, the handset in my hand and leaned up against my shoulder. Then I went to speakerphone, but that was getting choppy. Then I went to hands-free, which is the headset that goes around the top of your head, And then that didn't work out because of the bandwidth. And so now I'm on my cell phone. And now they're back to, over the internet. So it's kind of funny how technology is working here. I remember the days when I used to do this call with a friggin' receiver on my shoulder and having to hold it. Oh my God, having to hold the phone. Pretty funny. Okay, so we know our levels. Let's go to RUT. And Dave K, any trading? And send it in. If you have any questions or comments, and Mick and Mary, if anything you want to share with us, please, by all means do. Now, this is perplexing to me. Now, obviously, we're at 1691, right? So it fell through 1700. And 1700, it was a very big level. And today it's dropped down below that, which surprised me. Look at the RSI. The RSI is down to 4177. Well, if this is the quote-unquote American market, the American market is doing well, even including what the Fed thinks. Well, why the hell is the Russell lagging so badly? Why is it consolidating? But that goes back to markets can remain illogical far longer than you and I can remain solvent. You can't knock me off my stool dropping below that level, the 1700 level, but I'll be damned if it dropped below, this, what is it, 1580? Yeah, if it dropped to 1680, if it dropped below 1680 and start going down, it'd knock me off my chair. It really would. I would not expect that. I really was not expecting it to close below 1700 by much. And it's not that much, but it's enough. And I don't get why this is happening, because the United States economy is strong. Unemployment's low. Jobs are there. I mean, everything, our GDP is up. As a matter of fact, I was reading earlier that one of the areas of the Fed, I don't know where it was, they were actually forecasting 4.4 the last quarter of this year. That's what they're actually forecasting. That's pretty damn strong. Now it's just for the last quarter, but that's pretty damn strong. And I guess it's really not too far out, because the tax cuts and all the stuff that we got earlier this year, and a lot of the way the economy's been and running, I don't know. I know a lot of people are looking for work. Looking for workers. I really do. I mean, now workers are becoming a commodity, a precious commodity. And if you can find somebody that likes to work and actually wants to do a job correctly, you've really hit a home run these days. Because most of these people, again, I can talk about my field. There's one school down here called the UTI, Universal Technical Institute. I guess they're around the country. I don't know. But UTI, in our field, I call them untrained idiots. And when they come out of there, they're basically being told that they're going to make between $50,000 and $70,000 a year the first year they're out of school. Well, that's a bunch of horsepower. Yep. Yeah. That's a bunch of horsepower. And these guys, they have no practical experience, and yet they're being told, you'll get a job right away, and you'll do this and that. And then some of these guys, that not the brightest stars in the sky, obviously. They're blown out of the water when they're making $10, $12 an hour. Well, in our business, you got to pay your dues. Nobody's going to hire you for $25 an hour or $30 an hour coming out of school when you don't have any practical experience. And most of our work, as Mike knows, and I don't know whether anybody else does, but Mick does, you get paid piecework. Piecework is completely different than hourly. It's performance. And so, like, for instance, give you an example of how piecework works. If a water pump job pays 4 hours, and you go to a time and labor guide and it says, okay, you get paid, it's 4 hours of labor. And you're a mechanic and you can do it in 2.5 or 2 hours. Let's go 2 hours. It's simple. Very hard to do it in 2 hours. But say you did it in 2 hours, you still get paid for 4. Conversely, if that water pump pays 4 hours and it takes you 7 hours, you still only get paid for 4. So what it's doing is it's promoting proficiency, which is a good thing, in my humble opinion anyway. And because you still have to warranty it, you still have to stand behind the product. So what difference does it make if somebody can do it in less time than what the book says? Because they actually do times. They time guys. How long does it take them to do this particular job? That's how they come up with the estimated time and labor guide. So anyway, a good mechanic, somebody with a lot of skill, they'll make $30 to $38. I've heard of a couple guys making $40 an hour. Piecework, okay, but they're experienced, and if you can flag, 40 hours, you're getting paid $1,600 a week. If you can flag 60 hours, do the math. I mean, it gets up there pretty quick, but they're turning a lot of work, and it's making the shop money, and they're making money, so it's a win-win. Conversely, if you're not busy, the mechanic is really that good, he can't afford to stay there. He's got a family to feed, or whatever. Used to making so much money, right? My ex-brother-in-law, well, not my ex, but my brother-in-law, Penny's brother, Russ, he, just normally, he'll, on a slow 2 weeks pay, he'll book or flag 120 hours. That's 60 hours a week he's booking. That's 60, I don't know what he makes an hour, but, that's 60, $1,800 to $2,000 a week. It's not bad. It's over $100,000 a year. So, plus the benefits he gets and all that. So it's not a bad thing to do, but, my point is untrained idiots, you got to pay dues, and you don't make $1 million coming out of school. It's just not, doesn't happen that way. You got to pay your dues. It's like we all pay our dues with trading, right? How many dues have you paid, Mike? Quite a few, right?
I think I'm still paying them in trading.
Yeah, I hear you. Yeah. So anyway, I don't understand why the Russell is doing this. Do you have any idea or any explanation for this, Mike? Because I don't.
No, I really don't. The Russell is kind of confounding a little bit today. The only part of it that makes sense is, everything else in the market went down today, so the Russell went down today. At least that part makes sense. But as to why with it, it's been behaving more like the NASDAQ lately than the S&P or the Dow. But for it to drop clean through its channel and keep on going down, it may be a precursor of more weakness in the market. If again, the more things that we see pointing down, the more likely Mike is to be happy and make money shorting. So, I'm more of an S&P and a Dow watcher than an RET watcher, but I do keep an eye on this thing.
Yeah, I do too. I was surprised it dropped below that 1,700 level, but
yep.
And that's when that stuff just keeps ringing in my head. Markets can remain illogical. That whole phrase, and it's true because sometimes there's just no explanation that you can see. And a lot of times when you think you finally found the answer, then it's like, okay, well, it satisfied my curiosity, but did that make me a better trader? The answer is no.
Right. Well, that's the problem, right? I mean, it's the armchair quarterback or the Monday morning quarterback thing. Anybody who's been trading for more than a year should be able to look at a chart and say, this happened because of something you can see on the chart. But to make money at it, we need to look at the chart and use them as a somewhat predictive tool, at least as far as direction and whether a trade makes any sense. We can't be 100% certain, but we need to be able to get to the point where we're using probabilities to make profitable trades. And that's the difference, being able to do what I call read the mail and being able to actually be a trader.
Right. Yeah, a good point. That's a really good point. Let's see. Well, the Fed, let's go on to the Fed. Thank you, Mike. The Fed, obviously, the announcement was today. And today sort of felt like days of old. I thought of you, Mike, when I saw the action, when it started selling off a little bit and yada, yada, yada. Because those are the days that way back when Mike and I first came into this program, Adam used to say, you know what, get out or get light before the Fed announcement. Remember those days, Mike?
Yep.
And, because it would either go in one direction or another, or sometimes it would whipsaw you. So it'd sell off and then it would boink, it would just bounce back, and it was like the rubber band effect, right? So those are the days, and it sort of reminded me like maybe the market's going to start doing this again, which will be fun because that's when you can make money. Because obviously, why? Because of the fact that we need movement in order to make money, right? So volatility is a trader's friend. It can also be the bane of a trader if we don't get our stop losses right. But you're never going to be perfect. But the probability is that once you learn how to trade a hard market. It's like way back when Mike was coaching much more and I was coaching much more. A lot of times people would ask, I know they asked me, and I think Mike and I have talked about this numerous times. If you had your druthers, meaning as a coach, what kind of market would you like to be able to teach people in? My answer was always a volatile market. If I had my druthers, I would rather work with somebody in a very hard to trade market, because it's sort of like that, that saying, if you can make it in New York City, you can make it anywhere. Well, that's the way I look at trading. If you can learn to trade in a volatile market, then the rest of the market should be fairly easy. Not easy like a lame brain idiot can do it. Although look at me, I can. So obviously that didn't work out. but the fact is, that's just my answer. What would your answer be? I would want a volatile market. What would you say as a coach, Mike? If you could have your druthers, if you were working with someone or people, what kind of market would you want? A choppy market, a volatile market, a placid market? What kind of market?
I want volatile as opposed to choppy. Choppy
right.
gets really confusing for new people, but volatile, where the market is kind of swinging, it's swinging
right.
more than it's just seeming like randomly going up and down from day to day. Randomly up and down day to day is actually a lot of fun once you've got your feet on the ground and you learn to focus on just a few things. But when you're trying to learn and you're trying to absorb everything and you're looking at a lot of things every day, a choppy market just confuses you. So I'd prefer a volatile market.
Yeah. See, that's the same I would be too. But anyway, as it was selling off a little bit and I saw it trying to rebound, like I was watching Morgan Stanley, and because I'm short that, as I said, but I was watching it and I was wondering, is this going to be like the rubber band effect? Is it going to sell off so far that maybe it's going to stretch, and then it's got to come back to center? But it didn't. So that was good. I was happy about that. So what happened with the Fed? The Fed raised rates another 25 basis points, as you all know, it's a quarter point. And now it's at 2 to 2.25. Also, it signaled another rate hike in December. I was talking to a gentleman this morning, and I said, it kind of sucks that they want to do it in December. And this gentleman said, well, it seems like it can kill a Santa Claus rally, and it just, I don't know. For me, it just puts a damper on it. Like, why don't you just let it be? Do it in January when everybody's depressed already.
Yeah, right.
Everybody's all depressed. It's snowing. It's cold. You got to pay your Christmas bills. Everything's over. The Christmas season's over. New Year's over. I think they ought to wait until January. I really do. But, they've done it in the past. But that's just me. And I don't know why they don't listen to me, but they don't.
No.
But they say they're signaling a rate hike in December. All right. That's their words. This is also something interesting. This is the highest since April of 2008. I didn't know that. I thought it was much higher in 2008. I didn't even think about it. And all 9 voting members voted in favor of this rate increase. All of them. There's not one dissenting opinion. Sorry, I feel like I get the hiccups. There's also a big change in the Fed statement, and they removed the language indicating that it sees its policy as accommodative. In its August statement, the word accommodative was used, and the removal, most people think it indicates the Fed officials see their current rate policy as nearing the level that is estimated to sustain full employment while meeting the Fed's 2% inflation target. Okay, let me say that again. The removal indicates that the Fed officials see their current rate policy is nearing the level that is estimated to sustain full employment while meeting the Fed's 2% inflation target. Remember, ladies and gentlemen, we've been talking about this for years. When Yellen was in, et cetera, their target was 2% inflation. They felt that was the best balance, and the unemployment rate being very, very low. It was a good balance. They also, in their statement, they describe the economy as strong and feels like the labor market has continued to strengthen and economic activity has been rising at a strong rate. Statement also added, quote unquote, job gains have been strong on average in recent months, and unemployment rate has stayed low. Household spending and business fixed investment have grown strongly, quote unquote. That's saying a lot. I mean, it really is. If they feel like it's that strong, no wonder they raised it. Okay. Years ago, Mike and I both agreed. I think it was April. I don't remember the year. 2012, 2014. I don't remember what the year was. Remember, Mike? We both went, why the hell didn't Yellen raise the rates right then? Remember?
Yep.
And
oh yeah.
We both, and it was a perfect time to raise them, but they didn't. So now they're getting more hawkish. Now they're starting to, move it up. They're also trying to unwind their balance sheet. And if you notice in all your readings, I don't know how many you guys read about that, but they don't really talk about what's on their balance sheet. And it's trillions of dollars, literally. But they're trying, supposedly, it's like they're saying it as an aside. Oh, by the way, we're going to be unwinding our balance sheet. Oh my gosh. Yeah. It's like saying, oh, by and by, I'm going to diet in 2019 for a day, maybe an hour. Well, I don't know. It's very, we're in debt as a country, an unbelievable amount of debt. I think we're approaching 21 trillion. They've slowed it down since this administration has taken over, but I don't know. I know at one point, and I don't remember what that point is, in 2020 or 2019, but at the current rate, our interest payments on the money that is owed, that we owe, will exceed what we're spending on the military. Think about that. That's pretty scary. That's insane. Also, the Fed upped their GDP projection for 2018 from 2.8% to 3.1%. Now, think about that. That's huge. 2.8 to 3.1. That's 0.3%. That's a fair amount of money, right? And the Fed, if you remember, at the end of 2.5 was their GDP growth for 2018, and they were only looking at 2.5%. They forecasted 2.5% at the end of 2017. So that's what the Fed said. But you can't probably going to be 2.5%. Well, actually, it's going to go up to 3.1 is what they're projecting. That's pretty freaking amazing. I mean, they're pretty damn strong. That's pretty strong. So we'll see if it turns out that way. But they're not playing around. They're getting those interest rates up there. And the bank interest rates. I don't know about any of you guys, but my savings account still doesn't pay squat. How about yours, Mike?
We actually opened a savings account with Barclays U.S. and we moved. I think we're at about 2/3 of our total savings is now moved over there to get higher interest rates. And by higher, I mean like 1.85% on general savings account and 2.45 on 1-year CDs, which is still pretty pathetic. Right.
Yep. If you think about it, we're at 2% inflation. That's pretty depressing.
Yeah. And the Fed has now raised the core interest rate in the economy is now up to 2%, 2 to 2.5%. And the general rule is you tack on 2% more by the time it gets through all the layers to the outer economy, which means that that mortgage rates, which are considered to be the base consumer commercial rate, should be at right around 4 to 4.25% right now. And we're not seeing that yet. The interest rate has been going up, even though it seems to us like it's going up slowly. It's actually gone up so fast that it hasn't even rippled all the way out to the outside of the economy yet. But when it does, that's the point that everybody's worried about. The brakes go on the rate of growth of GDP and all this, and spending comes to a halt, and Democrats run around with their hands in the air screaming, and everything else. But my real point is that as we see the interest rates go up, like Darryl was talking about, the payment of the interest on the federal debt, as that starts to rise, we may actually see people start asking for some sanity in public policy, which I would dearly love to see. But yeah, we'll see. It's going to be a while. I mean, at some point, I really think at some point the interest rate is going to have the interest rate increases are going to have more of an effect on the stock market than we've seen. Some people think that
I would agree with
a huge effect on the stock market, but we're at all-time highs. So
yeah, exactly. Yep, and I agree, and I really, it's when interest rates are higher for the savers, the people that save money, that they're loving it,
Yep.
But you have cash and you can make. I remember in the Carter years that the CDs were like 12.5%.
Oh yeah.
It was huge. For a year, 12.5%. That was, but then when you look at the inflation was out of control when Volcker was in the lead. They said, I remember that when inflation got out of the bag, man, he couldn't control it. They had no way. I remember the floor plan at some dealerships were 20%, 19 to 21% was the floor plan on new cars. Wow. Yeah, that was freaking crazy. Yeah, it's just absolutely nuts. I don't know. Dave K said, sorry, still driving. So hard to type tonight. You're not supposed to be typing. Don't you voice text? You can voice text. Oh, no, you can't voice text into here. Sorry about that. I guess you can't. Anyway.
Not really.
All right. So the only other thing I wanted to say about the Fed, they are forecasting 3 more rate hikes in 2019 and 1 in 2020. So they get up there. They get up, like you said, about 4%. Well, if you get 3, that's another. It's another point. So that would they go at 25 basis points.
Yeah, we're supposed to still have 1 more this year, 1 in December. So they're talking about 5 more rate hikes. That would bring us up to 3.5% as the core rate, which is it's only anywhere from 0.25 to 0.5% higher than the historical norm. But it's still higher than normal. So we'll see. I always wonder why they try and fix things beyond, it's almost like closing the barn door after the horse goes out.
Right.
It's like if we know the historic average is 3%, why don't we get to 3% and stop for a year and see what happens, rather than saying, we're going to try and suck some wind out of this thing. Maybe it's not such a great idea to suck some wind out of something. Maybe just let it normalize.
Yeah. Well, you better get Powell on the phone tomorrow and explain that to him, Lee.
He doesn't take my calls. I call up and his secretary just says, he'll call you back. Sure. Yeah. He hasn't come to lunch with me for a week. Good grief.
Golly, what the hell is he thinking?
I don't know.
I'll tell you. Real quick, I mentioned this a while back, and I know we spoke about it briefly when Mike was on the call a couple weeks ago, whatever it was. I just wanted to throw this out here. Now, I am not recommending that you trade any of these stocks, but I've had a couple requests that, hey, can you put some pot stocks together and just give us the symbols and let us deal with it? Sure. All right, so this is the first one, CRON, Charlie Romeo, Oscar November. This was a pot stock, or is a pot stock. Volume's good. It's above our 20 million, but it's okay. The volume's good, and it's over $10. It's not a rule of 5. They are volatile. I'm not recommending you trade it. I'm just full disclosure. I'm not recommending these. I don't recommend them anyway. But the bottom line is that I just wanted to put this together. So if you guys wanted to write them down and look at them, you could. So CRON was the first one. CGC, Charlie, Golf, Charlie. Another pot stock. It is good volume, and it's good level, and it's like right around $50. So there you go. Steve, hey Steve. In my book, the Fed is the biggest culprit in killing a good economy. And you got a good point there, brother. It has done that in the past. CGC, Charlie, Golf, Charlie. Like I said, it meets our criteria. TLRY, which is Tango, Lima, Romeo, Yankee. Yeah, this is just bananas. Volume is there. It's over there. It is a newer stock. I'm not recommending you trade it. Again, I'm just merely, something that you put under, if you wanted to put in a portfolio, pot stocks, label it something, look at them in 2 or 3 months, or just track them. It's just something to be interested, to watch possibly. Tango, Lima, Romeo, Yankee. Now, 1, 2, 3, 4. I don't even know I'm not even going to put those up there. They're pink stock. They're pink sheets, and I don't want to put them up there. So I'm going to go with another one. Some of these are a couple of these are the latter part. Let me see. Is this one? Yeah, here we go. This starts the pharmaceutical side. Now, this is an expensive stock, and it has the volume, and obviously it has the money. But again, these are very volatile. I'm not recommending trading them, but this is the pharmaceutical side of the pot industry. Okay, so again, I'm just merely giving you guys something to watch and see this industry grow. But this is the pharmaceutical side, not the growing side per se. The next one would be this one's Golf, Whiskey, Papa, Hotel. Next one is Alpha, Bravo, Bravo, Victory. Another pharmaceutical, if I'm not mistaken. Isn't AbbVie a pharmaceutical, Mike?
Yeah, they're involved in marijuana research, which is why they pop up on all the, all the cannabinoid oils and everything. That's why they pop up on all the MJ lists.
Oh, okay. There's more out there, but a lot of them are pink sheets, and I don't want to throw pink sheets up there.
Let's not do that. It's bad enough without pink sheets.
Yeah, exactly. So we have Alpha, Bravo, Bravo, Victory. We have CRBP. Whoops. Charlie, Romeo, Bravo, Papa. They're kind of late to the game here. It does not meet the $10 minimum. Again, you might want to just track it. It meets it volume-wise, and these are all relatively new anyway. The other one's pink. Okay, the next one is, and why would NBev show up? New Age Beverages. Why the hell did they show up? I don't know, but they were.
No, it's not. It's not the same company. You're thinking of another one. I remember this, but it's a different one.
Okay. I don't know who these people are. I have no idea. New Age Beverages, but they're late to the game too. How's that for dark cloud cover? Picture perfect.
That's awesome.
Call Fidelity. Look, I think these are a little
hard
risky.
To borrow,
there you go.
Think? Ooh, yeah, hard.
72%, baby. Mm-hmm.
Yeah.
So those are some of the weed stocks. Oh yeah, they're hard to borrow. 72%. Right there. Can you see it?
Yep. Oh yeah.
That's bad stuff. Anyway, Mike was the other day. He shot me a message about Tilray. He's like, man, I would love to have shorted that. Well, I checked it that day or this day, and it was 99%. I checked it today. I think it was 72 or 73%. 73.
Yeah.
73%. Isn't that crazy? But anyway, it's it's made a big, huge move. Hey, all the more power to people that they bought it at the low and they raised up their hopefully they raised up their stop losses and they made money and secured some profit. But a lot of times what happens with these, ladies and gentlemen, people get greedy and they'll buy it at, say for instance, they'll buy it at $80 because it's going to the moon, or $100 or whatever, and it's going to the moon. And instead of moving your stuff up and protecting profit here, for instance, or even here, you bought it, whatever, say $100. Instead of moving up your stop and protecting this, making a 100% gain here, over 100%, then they just hold on to it. Now, it may be 3 or 4 months down the line. I mean, it could be back down to $20 for all we know. I don't know. I'm not saying it will be, but I've seen it happen many, many times. People get greedy. Oh, it's going to be around forever. October 13th is the day that Canada is, or 17th or whatever day it is. That's Canada's going to make it all legal. Everybody up there can smoke legally. Yada yada. I don't care. That chart tells me that's a dangerous stock to have been in to not protect the profit. I don't care about what that idiot. What's his name?
Trudeau. Yeah.
Trudeau. There you go. Yeah, he's a moron. Golly, he's as bad as our last president. Golly, is he bad? Well, maybe not quite that. I don't know. Don't really care. Anyway, all I know is he's not the brightest star in the sky. So, anyway, what is that, October 13th or 17th or something like that? It'll be legal up there. I think the oil for medical research, et cetera, I think is a very smart thing. It's been shown to definitely help a lot of cancer patients, et cetera. I don't know about the rest of it, but whatever. I mean, everybody's, in a free society, if you're supposed to be free, then you shouldn't have, anyone telling you what you're supposed to do, I guess, But anyway, that's a couple of stocks that you could follow. I got a few requests, like I said. So, well, Mike, I know that Dave K is driving. So I know he's going to want to listen to you about what you think your thoughts are on gold and silver. What do you want me to bring up?
Sure, we can do gold really quick. So I'd love to get to stocks too. So let's do GLD, which is just unleveraged gold. Yep. So with today's announcement, gold's been running sideways in this channel. I'm calling the bottom of it right now at 112.50 and the top up at 115. Or is that right? Is it 115? Yeah, 115. So it's basically just going sideways. And we went into today in the middle of the channel, which gives us a lot of room for it to drop all the way to support. The U.S. dollar fell quite a bit over the last couple of weeks, so the U.S. dollar now has room to recover and rise back up to recently reasonable heights. It's not gonna suddenly shoot off to all-time highs anytime soon, I don't think, but it's got room to run back up, and that unfortunately put some pressure on gold. So it's no surprise to see gold down at the bottom of its channel. I think right now, if you're interested in gold, you're either shorting or you're waiting, because I don't really see that we're at the bottom of the channel, and right now I don't have a whole lot of faith that the bottom of this channel is going to hold, but I don't have so much faith that I'm willing to short it quite yet. I might do a small short when it drops below 112.50, but we'll see. And then for the mining stocks, pull up Nugget. That's the easiest one to see. And so you can see that it's kind of doing a similar thing where we've now had a trip to a new bottom, down. The new bottom is defined. I'm putting it at 11, and that little tail down there just tells me where to put my stops. And then the top is basically 14. And so I really wanted to see Nugget get back up to 15 and then turn around and come back down, because a 3-point channel, a 3-point channel can be tight to play. A 4-point channel is definitely better. It's still above 11, so it still meets our 10 rule for people that don't like to trade anything below 10. That's fine. But remember, this thing is derived. We were talking the other day. I was talking with some of my friends the other day about usually it's October or November where direction rebalances their funds. And what they do is they like their funds to kind of have a median value of around between 25 and 35. So we wouldn't be surprised at all to see like a 2-for-1 split, or even maybe a 3-for-1 split in Nugget coming in a month or two. And that'd rip the price back up to like 25, but unfortunately it'll consume 2-year shares to do that. So that's something that you might want to keep in mind if all of a sudden you wake up and you see Nugget suddenly at like 24. Well, check to see if it's split. Okay, that's something that you're. Yep, a reverse split. Thank you. It's something that we need to keep in mind. So just so if you wake up one morning in the next month or two and Nugget suddenly like doubled overnight, check the news right away and make sure that it's not just a reverse split in Nugget, which really has almost no meaning. It just resets how much dollars per share, and doesn't signify any change in value. And that's it. That's it.
Okay. Are you still invested in Nugget, or did you sell puts?
Yeah,
Did you buy?
I sold calls. So I sold when it hit 14 the other day, and it kind of hung around and looked like it wasn't going to go any higher. I sold a whole bunch of covered calls to make some income, and sure enough, things starts dropping like a rock. So it's the same normal strategy is working just fine. Yep.
Cool. Dave K said thanks for the gold update.
Sure.
There you go. I know that made Dave K's night, so that's the only reason
Hope you're still on the road, Dave.
Yeah, it tunes in, and he's tuned in just to hear if the Mr. Gold Enthusiast is on. Otherwise, you just click. I'm off. I'm out of here.
I don't know about that, but okay.
I don't know. So, well, ladies and gentlemen, that's about all I got. Mike was kind enough to spend this evening with us, and I appreciate it, Mike. Thank you very much, as always. We appreciate you being on. And anybody have any questions, any problems, etc., please feel free to email me or call me, and we'll get together next week. I cannot believe next week is going to be October. That's crazy. This has really been an amazing year, meaning time-wise. It just seems like it just zipped by.
Wow. This
one really seemed like it did. Well, that's not the only reason. Maybe just 90% of why. Nice going, Dave. That's why it clicks out or tunes in. Thanks, Darryl and Mike. Have a great week, all. Dave. All right. Let's see. I agree. Time's zooming by this year. And then Mick and Mary, thanks, guys. Cheers to all. Eminem. All right. Ladies and gentlemen, be good, be safe, trade well, be blessed, and I'll catch you guys next week. Same time, same channel. Mike, once again, thank you, brother. I'll talk to you soon.
Pleasure's all mine. Talk to you soon, Darryl.
Okay. Good night, gentlemen. Good night, ladies. Good night, Mike.